Okie dokie. In today's journey at 8:28 Eastern Time, United States, we are going to enter in our first micro contract. Here we go.
Order filled.
The purpose of this is to manage risk. This is an experiment. I am training for an Apex Evaluation Challenge for the 50K account, which has a maximum drawdown of $2,500. I am training for that particular challenge. In my demo account, when I make back the losses that I had, up to $50,000, I will go and do the challenge. If price falls against me and I go red, the goal here is to not go and blow the $2,500 limit. Make sure that I am able to maintain the losses above that. This is a challenge in preparation for the Apex test that I will have to go through here in the near future. The reason why I'm doing it this way, which might seem odd to so many people, is because the focus should be on risk management. And we're all going to find ourselves in situations that seem to be falling in price or turning red. It's extremely important that we know how to cut our losses before we hit our maximum loss. So like and subscribe and see how I manage this risk as I prepare for the Apex Challenge. All right, I just want to take some quick profits here. I wish I would have held it, but the point is not to have a perfect trade, but to take small profits out of the market without blowing your account. All right, trade 2 seconds before the opening bell, well, minutes, and we entered in another trade at the top of this area here. I just wanted to grab some quick profits on that first trade just to get my mind set in a good situation. And now we enter into a difficult situation where we're buying at the high point. Typically, we would wait for a pullback or a trendline break, Fibonacci, fair value gaps, order blocks, support levels. But the challenge is to enter a risky trade on purpose and see if we can manage the risk without blowing up the Apex $2,500 limit. I want to be prepared for that when I take the real thing, so I'm training in bad situations. This is a bad situation. You don't want to buy at the highs usually. So let's see how this turns out. Let's see how I'm managing risk, how I'm scalping, position trading, adding to my position, scaling out and scalping and all that to accomplish this goal. Okay, when it gets back into the range, I'm wanting to scalp. That might have been a little early there, but we're going to start adding to a position just to lower the average price and see if it'll pop up and we can scalp out of it, keep lowering our average price, taking small realized losses, but in the bigger picture, getting into a position that's much, much lower for a greater move to the upside. Remember, the goal is to not go and blow the account, the $2,500 maximum loss. This is a challenge. We're trying to make sure we don't do that. No matter how much of a loss we take here, we can't blow the account. That's the goal.
Order filled.
Okay, so what happened was I scalped out of some that I added just to lower the average price. As long as when you're scalping, it's good that you're getting a higher price than where you bought it. However, it was lower than the average price. So there's a little small net loss involved in that. You'll have to calculate how you're doing this. Why are we doing this? Because we're managing risk. We're trying to avoid big losses. And when you buy something lower and sell it higher, you're actually reducing the amount of the loss. This is a scalping technique that, if done properly, can help save the account. It can help us from not blowing the account. And sometimes we'll have to scalp out of positions because it went against us. And we can lower the risk and lower the amount that we're losing by scalping out of it. Okay, we bought down here after the liquidity sweep on some of these pivots on the bottom side, and then we just jumped in with one. Now we're on break even on that, but we're trying to scalp up a little bit here as it goes up a little higher. Hopefully it'll go up and get that target, and then we'll be, the worst case scenario on this is that we break even on this ad and we start holding the 1 micro. Best case scenario is that it goes up and over the top of my average price and continues to head up higher. Get it?
Order filled.
So that's the second time we've scalped. Our average price is way down here now, but we're still taking small net losses along the way, okay? And at some point, the goal is to find the bottom. And we don't know where the bottom's going to be, and we never try to predict where the bottom is. We just keep finding liquidity sweeps Once it sweeps the liquidity, we try to enter in a position and scalp out and maybe ride it back up to the top. And so we still have more liquidity to go here. So it can keep dropping if it wants, and we'll just keep practicing that scalping technique all the way down, hopefully getting it right. Okay, what we did was as soon as it swept liquidity, I jumped in and when it started turning green, all right? And then when it popped up here, I put my stop on that one ad. I put my stop on break even, okay? Because I didn't want to hold two. Like if it keeps going down, you don't want to hold this position, right? You don't want to hold two because you don't know how far down it's going to go, right? And see, I would have lost because my stop was originally under the pivot. When it went up here, I wanted to get something on that. And so that's why I scalped out of the one, okay? And because you don't know if it's going to keep going down or not, right? But as soon as it went up to that 20 EMA, I took my stop from down here on the pivot and I went to break even. And that's how you keep from taking losses on your ads. You don't want to keep adding and adding and adding and adding to a losing trade. You might say, well, it's already losing. Well, not really, because every trade kind of goes through this red phase before it goes green, and not every trade goes straight up. You're going to have some drawdown on your trades. This is a drawdown on my trade. I haven't closed this trade yet, so this trade is not a win or a loss yet. Again, we're trying to manage risk. We're trying to get to a point where we can scalp our position without taking a maximum $2,500 drawdown and blowing the Apex account. So we're going to keep practicing our scalping techniques and managing risk. Now it's hitting a nice level down here.
Order filled.
Let's see what we got here, because hopefully it'll bounce in this area. I don't really want to hold two for this.
Order submitted. Order submitted.
There's another liquidity level down here. The maximum I'm willing to hold is two. I definitely have learned the hard way not to hold three. And again, once you get to a point where you have decided this trade has gone wrong, I don't necessarily want to hit my maximum loss today. You can cut the trade early and just count it as a red day. No problem. That's what we need to do. And that's what we're trying to learn how to do on this training right here, is when to get my mind ready to know when to cut the trade out. I can't stay in a trade beyond a certain point, right? And then that's what we need to learn how to do, is how to cut out of that trade before it actually...
Order filled.
Okay, so we just scalped that again. I thought that was a good area to scalp. Okay, so yes, we scalped here and here. Now our average price for this 1 micro is all the way down here. Like I said, we're taking small losses along the way, but not that many really. Let's take a look at what we're looking at here as far as what we've lost so far on this entire trade. The total P&L loss is $100. All right, on the far right, 99 bucks. As much as this has dropped down, we're only down that much, okay? The maximum loss to blow up your account is $2,500. That's when you know you've blown up your entire prop firm account with the 50K account on Apex, okay? So we're well within a reasonable limit to keep this trade going. So that's what I'm gonna do. Okay, let's see if it keeps going up here. And this is the whole goal, is to try to catch the bottom wherever it might form and hold it for a big move up. You know how the NASDAQ likes to do V-shaped recoveries. If it were to go from way down here all the way up here, that would be kind of the idea. If it continues to roll back down, we're only holding one contract, right? We can always take a look at the next levels of liquidity and try to do the same thing as it moves its way down. And eventually, you know, if we keep scalping and scalping and scalping and saving our net loss on the way down, by the time it gets down here, we should have plenty of bullets and ammunition and room for it to do one final deep liquidity sweep down here. And at that point, we have to reassess, you know, do we want to keep trying this, or should we just cut it off? You assess the trade as it develops. If it looks like there's hope and it looks like the things are going to work, then keep going. If you're far away from the overall drawdown, keep going. If you think that it's a waste of time and you're not feeling the market or reading the market right, then cut your losses and get out and call it a losing day. No problem. Okay, finally took profits on that thing. I want to play the choppy range. We're only up 48 bucks, but the point is the whole trade was a winner. We did risk more than that, but this is the challenge of managing your risk, trying to make a profit, scaling your position, and always being aware of the potential losses. The reason why I wanted to get out, now it's probably going to go up, is because I was trying to get into this range that's been happening right here. and I wasn't able to do it because I was holding this one position. It's not a perfect trade at all. A lot of little mistakes, a lot of mistiming and all that stuff going on, but hopefully you see what's going on. You might be asking yourself, why are you risking more than you're getting in profits? That's a very valid question. What we're doing right now is not focused on profits as much as we are risk management. New traders need to be focused on managing risk more than making money. And so we're taking the approach that way. Once we are able to understand what we're risking, how fast it goes to that level, how to mitigate that with scalping techniques, then we're building a solid foundation. That profits will come later. If I were to just let this thing ride up, the profits come. Managing the risk on the way down. Now that's the real skill we need to have. So more of our videos are going to be focused on that as we do this challenge, as we prepare for the Apex Challenge ourselves. Hopefully we'll be getting that pretty soon. Trade 2. We entered trade 2 way up here. We scalped all the way down and we exited below our original entry for a profit. Okay, now if I would have held it all the way up to my original entry, I would have made more. But you can see that we made a profit even though we had not come up to the top where we had entered in. How is that possible? Because of the scalping that we did on the bottom. Let me show you what we ended up with here. The account balance, $50 almost. And we did that by not even coming back up to the top where we entered in. And the whole time we're mitigating our risk to the downside by scalping 3 times right here. By the time it started this breakout, I just wanted to grab it because I was trying to play the range. I didn't expect it to keep going. You got to just do the best you can do with this stuff. You're not going to always be perfect on the entries or the exits. But the overall managing of risk is what we're trying to do here first. Right? Every day is different. And every day you need to kind of feel the market out. You can kind of get a sense, at least to a reasonable degree of educated guessing, where the market's bottom is, where the range is, and kind of estimate or guesstimate how to add and get heavier. So I'm going to try to do 2 contracts here, looking for price to kind of come back down into the range and maybe even towards the bottom here where I am willing to get heavier. Now that I've kind of sensed the market, we've got some profits as a cushion. I'm going to try to play it like that a little bit. And so
Order submitted.
you get more confidence and a little bit more secure in the trade. And so right now I'm long 2 contracts. What I did was I bought right here and I sold when it spiked up. And as it came back down to my original price, I bought again and I added down here, which is about 50-60% of this move up. We have a range towards the bottom down here where I think it'll get chopped around again if it goes down that far. And even willing to buy if it comes into the liquidity sweeps down in this area. Because we also understand that this week might be choppy because of the Fed minutes coming out on Wednesday. So the market might not have a big move or anything. It's probably going to be waiting for that to take place. So we take advantage of that. So now I'm long 2 contracts. Go ahead.
Order filled.
Okay, it got me out of one of them right there, which is fine for a profit because now my average price is down here. And if it goes back up to the top, that's great. So what I did was I started a new trade right here and I added down here and I started closing half my position right there. That was above the average price, so that one was not a net loss in any way. That was actually profitable. So right now we have our price down here now. So like I said, I'm willing to let this thing come back down into the range, which is down here, and even sweep liquidity before I'll probably add another one, unless it goes straight back up. If it goes straight back up, then I'll sell when it gets to the high and keep buying it as it pulls back for a dip. All right, like we said, we were waiting for it to come down into the range down here to see if we can add to the position, and that's where it came back down into this range. So we jumped in with 1. Now we're long 2. Our average price is right here, just above that entry. And we're going to monitor it closely because we just don't want the market to crash and keep going and hit our $2,500 threshold. That would be silly. So we have to keep an eye on it, try to scalp. We're looking for more liquidity sweeps possibly, and hopefully the bottom will hold for today, and if not, it might sweep that as well, and we may turn out to be a red bearish day, and it might turn around and have a red day today. You never know what the market's going to do. You always have to manage your risk, and that's what this experiment is all about. Not breaking the threshold, which will cause us to blow up the Apex Challenge. Okay, we bought in the range, and as soon as it spiked up, we got out of some of it. Now our average price is all the way down here. So hopefully if it goes all the way back up to the high, we'll be sitting pretty good on this one. And we're still ready to scalp if it goes lower and sweeping more liquidity down below. Okay, what's happened since I last recorded? Let's see. I was scalping. My mistake here is just adding one. I realize now that this should have been a lot better. Why did it not work as good as I wanted? Because I only added one instead of two contracts. And if I did that, that little minor adjustment there would have made a huge, huge difference. We're still profitable, but barely. And it keeps grinding down. I don't know, maybe I could have done something different on this move here too as well. Again, if I was adding two instead of one, that would have made a big difference. I'm trying to figure that out still. Do I want to add two? Do I want to add one? Depending on the day type and the expectation of that particular day, there's no reason why I could not have added two, because today was expected to be choppy. That's exactly what it did. So yeah, I could have added more. I also could have done a lot more scalping in the range than I did. I did a lot of scalping in this big circle right here, right? And it's just not working out. It's slowly chipping away at my profits. And it's, you know, when it does that, when a day does that, see, now it's down to $47. When it looks like it's just slowly itching away all my profits, I kind of want to close the day because I don't want to have a red day. What else can I say about that? You know, I guess I could keep my stop on $5 profit, and if it goes to $5 profit, cut it then. I'm still green and still profitable. That's an idea. And I could just simply say, you know, if it drops below this pivot here, I'm going to close the trade out. Or I could just end the trade right now for a $50 profit. So anyway, I'm just still waiting for it to just pop, just pop up there. And even if it does, I think I was only up about $150 when this whole thing started. So today's not working the way I want it to work. Experimenting, and I'm practicing. I am not a master at this yet. I see potential here, and I want to get better at it. So it takes time. It takes time. The big thing is don't blow your account. Don't blow your funded account. $2,500 threshold is all we're given when we get the Apex 50K challenge passed, and that's all we're going to be able to work with to have real money coming in. We got to get good at that now. And, if we can't do it now in a demo, don't blow it up. Don't drop down below $2,500. If you can't do it in a demo, there's no sense in going and getting a prop firm challenge and pass it and try to make money, because we got to make sure that we're ready for that. Anyway, we'll see you in the next video. God bless you. Peace.